floor of the CME Group in beautiful Chicago, Illinois, the home of Moo and Oink, Moo and Oink. Now, this is your Mr. Top Step update. Now, why do I bring up the Mr. Top Step update? Or Moo and Oink? Why? I'll tell you why. It's because of corn. I just got back from vacation. I was out in Michigan, but I also got a good chance to kind of drive through Indiana and Illinois and see a nice chunk of the farm country up here. And let me tell you what it looks like. Burnt. Corn is burnt. So what does that have to do with you, the equity trader? Well, one thing I think to look out for during this earnings season is how feed prices and corn products affect corporate earnings. I think you're going to see them strongly affected, especially for those non-hedging. Another couple weeks, soy is going to come into play as well. All right. So right now we've got corn at or near all-time highs. It's going to break those. All right. We're going to see corn at incredible prices because the crop is that bad. Add in a potential QE3, and we've got corn that is going to wipe the floor with unhedged corporations, buyers of corn, buyers of feed, your Tyson Foods. Even your McDonald's and Yum brands could net see some real problems. Others that could have some problems. Your retail stores. You know, any of those type of Dean Foods. All of those are going to have some real problems as feed prices skyrocket. So I think that we're heading for what could be a really interesting week. Last week, dull. This week, starting out dull. Market's not doing much today. But we've got a whole slew of corporate earnings. And I think that it's not going to be the earnings themselves that matter. It's going to be the guidance. Watch what Google does. People are going to be interested in what their cost per click fell by. Even if the cost per click the total clicks went up, people are really watching that cost per click. Watch, you know, a lot of the other names. There's Johnson & Johnson, you name it. But watch for that guidance. I think that the story of the summer, even more than Europe, in the United States, is going to be the rally in commodities. And not just, and specifically corn, with a secondary being soy. All right? And I'm not a grain guy. Let me be very clear on that. I'm not a grain guy. But this story is so big, if you're an equity guy, or an oil guy, an energy guy, or even a bond guy, you need to know what's going on within the ag sector because it is blowing up. So, how do we trade it? Well, I think S&P vols are going to continue to sink throughout the summer until this kind of realization of what's going on with corporate profits are in terms of ags. At that point, I think we've got another shot of the VIX popping at 25. So, how am I trading things? I'm going to be trading kind of a very protected iron condor. I'm going to have very tight protections. Even a butterfly may make more sense than an iron condor right now. I think butterflies, with kind of their centered process, and kind of tight range, which is where I think we'll be for the next couple weeks, could really be effective, even with the VIX as low as it is. So, from the floor of the CME Group in Chicago, Illinois, I am Mark Sebastian, Chief Operating Officer of OptionPit.com, and this is your Mr. Top Step Update.